Welcome to BWC News. I am Elizabeth. Data released by the U.S. Treasury Department on January 18 local time showed that total overseas holdings of U.S. Treasuries increased by $141.9 billion to $7.274 trillion in November 2022, with Japan, the top creditor, increasing its position in U.S. debt for the first time since June. China held $1.0601 trillion in U.S. debt in January of last year, and by November, its holdings stood at $870 billion. In 1 year, China sold $190.1 billion in U.S. debt. Although China remains one of the top 2 debtors of U.S. Treasuries, the size of its position is the lowest since June 2010. Since 2022, the price of 20-year U.S. Treasuries has fallen by 4%, and some combinations of stocks and bonds have seen yields fall to -30 to 40%. And the Fed is also now forecasting that interest rates will likely exceed 5% in 2023. Then it is expected that portfolio yields on U.S. bonds, stocks, and bonds are likely to continue to fall this year. The inversion in U.S. bond yields is already the largest in 40 years, and this situation is also the sternest warning of a recession in the U.S. economy in 2023. The inversion is the worst since the 1980s, both in terms of the extent and duration of the inversion. Now multiple countries are beginning to dump U.S. debt, with Japan, its top debtor, setting a record for the longest reduction in its holdings. China, the second largest debtor, also sold nearly $100 billion U.S. debt in 2022, as well as the United Kingdom, France, Switzerland, Japan, Brazil, and other countries. A total of 27 countries have recently sold U.S. debt to varying degrees. The scale is very large. Remember the last time the world's so crazy to throw the U.S. debt, or more than 40 years ago, and the previous U.S. debt has never been this size today, and now has exceeded $31 trillion. You know that the U.S. GDP in 2022 is only about $25 trillion. Its debt ratio is already close to the international alert line, and the dollar credit is declining. In this context, U.S. Treasury Secretary Yellen met with Chinese Vice Premier Liu He and expressed her willingness to manage differences and promote cooperation with the Chinese side. Prior to her visit to Africa, Yellen reportedly traveled to Zurich, Switzerland, for her first closed-door meeting with Liu He, which lasted for 3 hours. After the meeting, Yellen told the media that it is incumbent on China and the U.S. to prove that the two countries can manage their differences and prevent competition from turning into conflict. In future interactions, the U.S. and China will communicate directly that there will be no deterioration in bilateral economic and financial relations due to lack of communication or misjudgment. The U.S. Treasury Department also issued an announcement saying that the two sides had frank communication and agreed to strengthen cooperation on climate change, economy, and other aspects on bilateral and multilateral basis. Objectively speaking, although Yellen is hostile to China and often makes inappropriate China-related remarks, she is also considered a more rational politician in the Biden administration team. Previously, Yellen had advocated the abolition of tariff policy on China, but unfortunately it was not adopted. At the end of last year, Yellen had a personal visit because of China's massive sale of U.S. debt, and then Chinese ambassador to the U.S. Qin Gang met, and both sides agreed to strengthen macroeconomic policy coordination, as well as communication on bilateral economic and trade issues. The reason why Yellen met with China again and again for cooperation is not to ease Sino-U.S. relations, but the U.S. side has a request from China on the U.S. debt issue. Data show that the size of the U.S. federal government debt will reach $31.4 trillion legal debt ceiling once this ceiling is exceeded, and the U.S. Congress did not approve an increase in the ceiling. The U.S. Treasury will not be able to issue new debt to repay part of the maturity of the national debt. The government may also face a shutdown. At that time, international investors will have a crisis of confidence in the United States and the dollar. The dollar will continue to depreciate. This will lead to domestic capital outflow, stock market plunge, reduced income and consumption power, further aggravating the economic difficulties of the United States. In order to avoid such problems, the U.S. side can only seek help from China, hoping that China can eat a considerable amount of U.S. debt to ease the economic pressure on the United States. However, Although China's economic situation is relatively good, the massive reduction of U.S. debt holdings is not arbitrary, but a decision made based on its own interests. First, for political risk considerations. With China's economic development and comprehensive strength, the U.S. has come to view China as an imaginary enemy. Not only has the U.S. repeatedly and blatantly interfered in China's internal affairs, but Secretary of State Blinken has also joined Japan in calling China its greatest challenge. Second, for economic interests. The U.S. has already raised the debt ceiling once before, and the total debt is rising, plus the Federal Reserve's sharp interest rate hike this year. The U.S. government will have to pay back the interest on the U.S. debt next year will probably double. Many economists are pessimistic about the U.S. economy next year, so in such a situation, it is only natural for China to hedge its risks and sell U.S. debt. In order to solve the domestic dilemma, Yellen sought China's cooperation, and in order to continue to promote this issue, Yellen also made a positive statement in the presence of Liu He that she is willing to visit China in the near future and welcome the Chinese side to visit the United States. In response, China responded by welcoming Yellen's Treasury Secretary to visit China at an appropriate time this year. It is true that China-US relations are facing difficulties at the moment, but there are always more solutions than difficulties, and both sides must focus on the authorities, properly handle differences and seek consensus. The current US-China relationship is still in a difficult period, and tensions are worrying. The meeting will help the two countries to improve communication and manage differences. According to the Financial Times, although the Chinese and U.S. heads of state met in Bali last November and reached a number of agreements and decided to jointly discuss the framework of the guiding principles for U.S.-China relations, the script of the ongoing game is still being played between the two world's largest economies. Last year, the U.S. introduced new regulations targeting Chinese chips and blacklisted several Chinese companies from trade. The U.S. National Defense Authorization Act of 2023 is likely to make a play on Taiwan-related issues, posing risks to Sino-US relations. Against this backdrop, Liu He's meeting with Yellen was first seen as a new initiative to strengthen ties and communication between China and the United States amid rising tensions. Bloomberg noted that, despite their differences on a range of hot-button issues, the meeting did mark a modest step forward for the U.S. and China after a cautious start to re-engagement last year. It's the end of this video. Thank you for watching. Please subscribe to the channel to support. See you next time.